So it's update time and a couple of things to say. For the first time, I'm going to lump in everything I have invested in the stock market. So we're going to include all my casual investing, all my ISAs across all the different platforms I use. The second thing to talk about is the big news with Trading 212. So unless you have been living under a rock recently on finance YouTube, you'll know that Trading 212 have once again opened their doors. So I'm going to get into my portfolio there as well, have a better look at it. Now that people are able to sign up there and have a look around that application, I'm just going to have a quick run through of some of the key features that separate Trading 212 from some of its competitors. Finally, I'm going to round it all off with this year's ISA selection. InvestEngine, Vanguard, all those guys have got a feature, so stay tuned. So as we sit here with Trading 212, waiting in the wings, ready to go, I just want to say thank you to everybody who has shown me support on this channel over the past 2.5 years or so. I'm getting an awful lot closer to my target at this point in time than I ever thought I would be. We're well ahead of schedule, and from that point of view, I just want to say thank you to everybody who has used my affiliate links, everyone who's taken on a product I've talked about, anyone who's found value in these videos, click the link. These are all helping with that ad revenue and those affiliate links and get me free shares and sign up bonuses and all kinds of stuff. So it sounds cheesy, but honestly, from the bottom of my heart, thank you so much. You're really, really helping out here. So with that emotional moment out of the way, let's just get into Trading 212. So it's my opinion that Trading 212 is probably the best overall platform available for UK investors today. And I say that from the point of view of all the different things you can buy on it, all the different stocks, all the different ETFs. You can have an ISA free of charge. You can use CFDs if you're into, and you have general investing accounts as well in case you've maxed out your ISA or you have it somewhere else. It's all there for you. So let's log into my Trading 212 account. So we're having a wee look at the desktop version today because that's a little bit different than what we normally do with the phone out, and we're going through all the different details. So make this a little bit bigger so that everybody can see what's going on here. Down the left hand side, we've got all our investments. There's a nice pies feature. The cool thing about pies is that you can set up a collection of investments that you want to add to on a regular basis. So in this particular one, my Vanguard's ETF here, I have created a holding made up of 5 different Vanguard ETFs, but with Trading 212 you can treat those all as one kind of entity if you like. So you can invest funds to that particular pie and it will distribute the money that you invest across the different holdings in your pie. So say for example you put £100 into this particular pie, and 33% of that, or £33, is going to go to the FTSE Developed World, 32 to the S&P 500, 15 to an all world high dividend yield, £10 would go to the FTSE 100, and £10 would go to the emerging markets. It's a nice way to basket together stocks or ETFs that you want to put together. That's the first cool feature of Trading 212. The next is that if I go to my investments, you can see that I have some wonky looking numbers here. So I have 88.9964292 shares of iShares Global Clean Energy. That's all because Trading 212 will let you have fractional shares. So it's not like Vanguard where you have to have enough money to buy 1 unit of the S&P 500, for example. Trading 212 are going to let you use whatever money you have, so you get to really get the value out of each and every penny. It says here that I am £472 in front. That isn't quite accurate for this. The reason being that the stats here, the money is only calculated at the point when you deposit it. So at one stage in April, I withdrew all my money from my general investing account and plunked it into my ISA, and at that point the clock is reset. So these figures don't really mean anything. So we'll come back to that notion in just a little bit, because I'm working on something that I hope is going to help people with this exact problem. However, as we go down these holdings, we'll not pay too much attention to how they're doing, just what I've got, what they are. Long been a fan of Amazon. How you feel about their ethics and their friendliness, shall we say, to the high street market is definitely a conversation that should be had. But they are a cash generating monster as far as I'm concerned. They've obviously got their retail arm, and then things like AWS, their cloud computing services, so they're big business. My shares recently went from 0.6 maybe, I can't remember exactly what it was, to 12 shares because of the split. It's easier to read, but it really doesn't amount to too much extra, but they have gone up. Well, I've seen a bit of growth over the last 3 months again, so Amazon look like they might be getting back on track. Coca-Cola is my next holding. Pay a half decent dividend. Coca-Cola aren't going anywhere. They make tons of products. They've got tons of ways to make their money, advertising everywhere. Big company, very reliable, and I'm very happy to hold them. iShares Electric Vehicles and Driving Technology ETF. So this is everything to do with electric vehicles. Very much one for the future. Maybe closer future, near future rather than one too distant away. Electric vehicles are going to have to come into play here. The cost of fuel, of everything else is getting astronomical, and I think the more players that come into this electric vehicle market, that we're going to drive down prices. We're going to see bigger battery life. It's coming, so I'm hoping to build a small position in this and maybe increase that over time. Get my foot in the door, as it were. Similar vein, iShares Global Clean Energy. We can't keep going the way we're doing. We're going to leave no planet left for anybody if we keep on turning up the way we are. So I think it's a good spot to have a position in this ETF that looks into firms that are all involved with global clean energy. Legal & General, financial services company here in the UK, pay a hefty dividend. They've fallen on trickier times just of late, but I'm not worried about that. Microsoft. I've once heard people say that they are very good at being second. iPads came out and Microsoft brought out all their Surface technology, that kind of thing, but Microsoft aren't going anywhere. They've great customer tie-in. It's very difficult to get out of a Microsoft ecosystem once you're in it. Another big cloud computing provider as well, obviously with Azure and so on. So I'm very happy to hold Microsoft shares for as long as I can. National Grid, obviously a massive foothold here in the UK, but they've also got operations in America and further abroad. Pretty boring stock, pay a half decent dividend again. It's just a fairly stable looking spot in my portfolio. Palantir, gutted about Palantir. Have to be honest with you. I bought these stocks maybe about a year ago now. Really thought that they're one for the future, and I still do. I can't understand how it's going so badly wrong for them, really. But the share price is reflected by how the market feels about it and how much money they're making and that kind of thing. It hasn't been good, let's be honest. So we'll park that one. We're going to leave that one for some time. Unilever is a kind of company that are good to have, maybe coming up in a recession. They have tons of products that you're going to find in your cupboards, under your shelves, all kinds of cleaning stuff, food stuff, medical stuff. Pretty stable bunch. They pay a reasonable dividend as well, and you're probably going to find these guys in most UK investors' portfolios. VanEck, video gaming and esports. A little bit disappointed with this one. I thought it would have been doing better than it is at this point in time, but given the state of video gaming, how popular it is and how it continues to grow, I'm happy enough to hold position in this one. So these last 5 holdings I have here with Vanguard, you're going to see that Vanguard very comfortably underpin my investing strategy as we go forward. So we'll talk a little bit more about these as we go through my portfolio, but that's Trading 212. We're back in action. So if you're interested in signing up with Trading 212, I do have a link, of course, in the description. But even more than that, if you're getting value out of this content, please leave a little dab on that like button. It will help this channel massively. Thank you. And so with that, let's move on to InvestEngine. InvestEngine is this year's choice for ISA. I really want to simplify my strategy this year, and InvestEngine have made that very, very simple for me. They deal only in ETFs, so if you're interested in individual stock picking or anything like that, this is not the platform for you. But since this year my strategy was just to load up on my Vanguard ETFs, InvestEngine offer me the best platform for that, even better than Vanguard itself, because it is completely free for the kind of thing that I want to do with my ISA. A DIY ISA on InvestEngine is entirely free, bar the ETF charges that you'll get with any platform. So there's no fees for depositing, there's no fees for withdrawing, there's no ongoing ISA fees or anything like that. It's entirely free, completely free to invest with InvestEngine, and to be honest, that's what makes it so attractive. So looking at my DIY self-managed portfolio is the one we're gonna look at today. I also have these managed by InvestEngine ones, which I have been tracking just to compare performance. To be honest, it hasn't been that good over the past year or so with these guys versus what you might be able to do yourself, depending on what you pick, of course. But I have some videos on these managed by InvestEngine portfolios if you're interested in seeing how they have performed. But today we are going to look at my DIY ISA. So we've got £6,126 in here, £6,000 deposited this tax year. We're making £126.77, and the internal rate of return is actually a minus figure. Now, that's okay. I actually raised the question with them last month when I saw this figure. I couldn't work out what we're talking about here, but this is your overall gain or loss, and this is the internal rate of your return on your money. I'm not going to go into that right now. There are explanations of what that means and how it's all calculated. Today, we're just talking about our portfolios. So here we're made up of the Vanguard S&P 500, FTSE Developed World, All World High Dividend Yield, and the FTSE 100. And you can see that that's the only one actually in the red at this point in time. The cool thing about InvestEngine, you can click on this particular ETF you're looking at, and you can get all the details, things that you want to see. You can see what your holdings are. You search by the regions where it's based. It's obviously the S&P 500 based in America, and the sectors here, different areas that you are invested in. So always important to keep an eyeball on what it is you're actually invested in. 6.6% of Apple, 5.8% Microsoft, 3.8% Google, Amazon. You know, all these massive companies here taking up the larger chunks of the ETF. And as you get right down to the bottom here, you know, you've got things like Equifax, Rockwell Automation. Never heard of them, but they're less than 0.1% here of the actual investment. But it's funny because you hear people talking about that they don't want to invest in ETFs because, you know, you don't get to hold those big companies. Well, you absolutely do. 6% of Apple, 5.8% Microsoft, all the big guns are in here. But it spreads that risk a little bit more. So hopefully that, you know, you'll ride a nice gradual up curve as you go through your investing journey. See some nice graphics here of how things have gone over the years. There's COVID right there, and then everything that came after. And we're right about here right now, so we're close to an all-time high with this particular ETF. It's nice to see. Other cool features that InvestEngine are offering here, if we can see behind my big head, we've got an option to set a monthly top-up, which I don't, because I like the act of moving money into my investing. But we can set, I do have auto invest turned on, so that anytime dividends or anything like that are paid, it's immediately invested back into my investments here. And when you do that auto investing, the way it knows how to do that is by the weights that are in your portfolio. So 30% of this portfolio wants to use a Vanguard S&P 500, 30 for the FTSE Developed World. So again, if I have £100, the auto invest, it gets split up as per these percentages. You can then rebalance your portfolio if you want to, and all those sorts of cool things. And again, just like Trading 212, InvestEngine will let you buy fractional shares as well. So it has that advantage again over Vanguard, because you don't have to have the right amount of money to buy full units of whatever it is you want to buy. So it's pretty cool. I found InvestEngine to be very, very good, very smooth platform, very quick. If you do have an InvestEngine account, you can refer a friend, which is pretty good. It says here you get £20 each. In actual fact, if you use my link in the description below, you do get actually an extra £5. You would get £25 when you invest £100, at least £100 for 12 months. It's important to say that these investments, obviously with any platform, anywhere, can go up and go down. So go in with your eyes open, make sure you understand what you're getting into before you start investing your money. If you have any questions about anything I've said so far, feel free to reach out in the comments and I'll do my best to answer every one of them. That just leaves us with Vanguard and then of course GoLightYear, which is the latest addition to my platforms that I'm using. Let's keep going. So I mentioned just earlier that the reporting maybe in Trading 212 wasn't the best it could possibly be, which leads me onto this little project I'm working on at the moment, where I'm trying to drag together all the information that Vanguard pump out and all the information that Trading 212 push out about all the transactions you've done, all the interest you've earned, how your growth's gone, all that kind of thing, and pull it into one convenient looking report. Microsoft Power BI is a pretty cool tool to be able to do that. It's entirely free as well, so I'm working on something that's going to let me get some meaningful visualizations out of the data that I'm using. Now unfortunately InvestEngine don't offer that data, and neither do GoLightYear at this point in time, which makes it a little bit tricky to bring a complete picture, but it's a little project I'm working on. If you're interested in seeing or hearing a little bit more about that, leave a comment below and I'll see what I can do for you. Vanguard, okay, here we go. They've been sticking with the same web layout for about the last 20 years. No, but it's a very solid platform. So you can see here I've got 18,255.68 with a personal return of 36%. So this is the oldest of all my ISA accounts. I haven't actually paid into this one well over a year and a half now, but it was where I got the ball rolling. And have we look at the investments, and it's all very familiar at this point in time, so I won't go into it too much. We'll have the emerging markets, FTSE 100, All World High Dividend Yield, FTSE Developed World, and S&P 500. Vanguard, again, you can't buy individual stocks and shares here. So if you're in for that, Trading 212 would be the platform that I would use. There's just too many charges and things with free trade now. There's some stocks and shares are behind paywalls. It's just not worth it. You're paying for an ISA. As far as I'm concerned, it's just not a good option. But you know, each their own. Trading 212, if you're into stocks and shares, that's the one I personally use. But if you're looking for a strong reputation with good value fees, and Vanguard is definitely a great option to choose. No sign up perks with this one, of course, at this point in time, and of course you do have to buy your ETFs in whole units, which may or may not be prohibitive depending on your financial situation, but you know, rock solid, been around for years, and I really couldn't criticize them beyond this superficial stuff. Take a quick look at the performance. You can see I started here with around about £4,000, add a few more quids at the start, and then COVID arrived. But you know, it didn't seem to slow it down too much. We kept going, and we're nearly touching all-time highs here with my investing. So it just goes to show, time in the market probably going to give you a good chance of succeeding if you can just be patient enough. So £18,255.68 there. Lightyear to come. GoLightYear is the latest and greatest app available here in the UK for us investors. At the moment, the application is pretty limited. You can only buy US stocks. I think it's very much aimed at traders at the moment, because there aren't any ETFs or anything like that on it. US stocks only. I will say this, it is lightning quick and it's very, very easy to use. I made a review actually of this particular application a month or two ago, so if you're interested in finding out a little bit more, you can check that out. Today we're just looking at the portfolio. So overall, I am about £48.22 in front. You can see here the spike on the right hand side is where there's some more money has gone into the account, and it hasn't gone very well since then. But at the moment, £48 in front. So this month I have thought I would buy myself some golf shares for a few reasons, and they're all anecdotal. I am not a great stock analyst or anything like that. I bought shares in Acushnet, Callaway and Under Armour because I think golfing stocks are going to do quite well going forward. Here's why. This LIV Golf is kicking off, and it's causing the PGA Tour and the European Tour to get their act together and come up with something innovative, easy for you to say, and I hope that is going to drum up some more interest in this game that we all love so much. And by love, I mean hate. So looking at prices for things like golf courses and equipment, kit and all that kind of thing locally, prices are going up, and I'm thinking that these companies are going to do pretty well out of the whole battle for the golf hearts and minds. So I bought myself a few shares there. You can see it's not going particularly well at this point in time. Acushnet 7% behind, Callaway 7% behind, Under Armour 11% behind. That's the way it goes sometimes. Like I say, I'm not a great stock picker. The vast majority of my proper serious investing, shall we say, is done through ETFs, Vanguard's ETFs, across the different platforms in ISAs. This is a bit of fun. It's not going very well, but there you have it. If you have any suggestions what I think I should be buying on GoLightYear, then leave a comment below and let me know what you think I should be getting into. So right now, £1,108.22. Let's total all that up and see where we are. So that's it. We're sitting now at about £43,883. We're really, really flying, as I say. Thank you to everybody who has been using my links. So if you're interested in getting started with investing, or maybe you're not sure which platform is the right one for you, then maybe this video here can help you make that decision.